Are you thinking about day trading securities? If so, then there is key tax information that you need to be aware of before you start. Day trading securities can be very profitable when it's done correctly, but it can also result in major losses if it's done poorly.
You lose.
You need to know exactly how to handle taxes related to day trading, whether you succeed or fail as a day trader, before you begin. So in this video, I'll be going over all of the key tax information that you need to know as a day trader so that you can prevent yourself from making costly mistakes that will cost you a fortune. Also, don't forget to stay until the end of this video because I'll be giving away one piece of golden information regarding day trading taxes that you're not going to want to miss. Without further ado, let's dive in. All right, guys, first things first is what is day trading? Before we get into the taxes related to day trading, I'm going to give you a quick overview of what day trading is. Day trading is the act of buying and selling securities in a very short time frame. Day trading is not the same thing as investing. With investing, securities are typically purchased with the goal of holding on to them for the long term. Okay. So with day trading, the goal is to take advantage of the short-term price movements and trends in order to generate quick profits. Day traders typically do not buy securities due to strong underlying fundamentals that could cause the asset to appreciate in value over time. Instead, they make purchases based on things like volatility caused by emerging news stories or market inefficiencies that can be exploited using sophisticated algorithms. So this is a completely different process than just investing in a stock that you might like. Now, the question is day trading risky? Yes, day trading is extremely risky. In fact, one study of 1,000 day traders in Brazil showed that only 3% made money over a 300-day period. There are many reasons why day trading is so risky. First, short-term price movements can be much harder to predict compared to long-term movements. And second, there are millions of day traders around the world all trying to capitalize on the same opportunities, which means competition is fierce. Finally, there are simply too many variables for most people to be able to calculate or analyze in order to correctly predict which direction the price of a security will go over the course of a 24-hour period or less. However, despite the fact that day trading is risky, every year countless people are lured into it by the potential to make huge sums of money very quickly just by pushing buttons on a keyboard. But this is where the trouble starts for many taxpayers. Let's talk about deducting day trading losses. Many people who day trade discover at the end of the year that they have generated substantial losses, often in the 5 and sometimes even in the 6-figure range. But here's the thing, guys. By default, day trading losses are considered to be capital losses by the IRS, which means that they only have a maximum of $3,000 in losses that can be deducted in the year. So obviously, if you have tens of thousands of dollars or hundreds of thousands of dollars of trading losses, as many people do, this is going to be a major problem. However, and luckily, the IRS does provide a way in the United States tax code for day traders to convert capital losses into ordinary losses in order to get around this $3,000 maximum deduction limit for capital losses. So if you're a day trader and you lose more than the $3,000 in a year and want to convert your capital losses into ordinary losses, then you can do so with something called a 475F election. Now, let's talk about the 475F election, which is also known as the mark-to-market election. This allows traders of securities or commodities who meet certain criteria to mark-to-market their securities and or commodities positions in order to deduct trading losses above $3,000. Let me make sense of all of this for you. Mark-to-market refers to the process of calculating losses or gains based on a security or commodity current fair market price relative to the price you bought it at. So by using the 475F election, day traders can deduct losses way over the $3,000 amount and use the mark-to-market method of calculating losses. Does that make sense? I just want to mention here, guys, that if you have never heard of the 475F election, then you're not alone. Sometimes accountants and tax preparers simply forget to tell their clients about this rule, or they don't know about it themselves. First thing I want you to understand is that this rule was created in the mid-90s, and this is relatively recent as far as the tax rules go. And second, day trading has only recently became extremely popular. Like, this is a recent thing. And so thanks to platforms like Robinhood allowing for zero commission trades, people are getting into day trading more regularly. So some accountants do not have this rule on their radar yet. In fact, one accountant was actually sued and found negligent and was forced to pay over $2.5 million to a former client for not informing the client of the option to make the 475F election. As you can see, this is a very important thing to know about for both the tax preparers and for the taxpayers, to protect both the tax preparer and the taxpayer. And here's some of the rules that I want you to understand about the 475F election that I want to make sure I cover. One of the most important rules of this entire election is timing. I'm going to repeat this. One of the most important rules of this election is timing. I really hope you're watching this video in time. This election must be made by March 15th of the calendar year for which you wanted to take your losses. It has to be made by March 15th of the calendar year if you want to take your losses for that tax year. So if you want to deduct your losses with the 475F election for 2023, then you have to make the election by March 15th, 2023. This means that if you want to take advantage of this rule next year, guys, then you only got a few months to make your election, or a couple of weeks. It is also critically important for you to know that unlike with other elections, the IRS does not approve any late elections. I've done an incredible amount of research on this. I have read court cases. There is no late election on this because the IRS determines that you would have an advantage over the government by making the election late. I've done so much research on this. There's no way around it. It does in some rare and extreme circumstances, but most of the time when I'm telling you guys, it doesn't. I have only seen this in 1 or 2 circumstances. Most of the time, it just doesn't. And that means that you need to file your 475F election on time, or you could be out of luck when it comes to deducting your trading losses the following year at tax time. So please do not miss this deadline. To make your 475F election, for a day trader, you have to do this right now. Please do not forget about this, guys. Okay. Another important rule regarding the 475F election is that the election is not available to investors. So if you're a day trader, yes, you can qualify for the 475F election, but if you're an investor, you won't qualify for the 475F election. Now you might be wondering, what exactly is the difference between a day trader and an investor, Karlton? After all, they both buy and sell securities, right, Karlton? So how do we know which one we are? Well, this issue has come up in many times in tax court, and there's a 2-pronged test that has been created and established to determine if a person is an investor or if a person is a trader. So to qualify as a day trader and not an investor, a person has to, 1, use a strategy that involves capitalizing on the swings of daily market movements, and 2, make trades on a continuous, regular, and frequent basis. Okay. So if you meet these criteria, then you can consider yourself a day trader and you can qualify for this 475F election. If not, then you are most likely an investor and you will not be eligible to qualify for the 475F election. Now, let's go over some pros and cons of the 475F election, because this is probably new to a lot of people who are hearing this for the first time. If you're considering making the 475F election, then this is important for you to fully understand all the pros and cons of doing so. Only once you understand the advantages or disadvantages of this election can you actually know whether or not this choice is right for your situation. So let's start off with the pros. As we have already mentioned before, one of the biggest advantages of the 475F election is that you can switch your trading losses from capital losses to ordinary losses and thus get around the $3,000 cap on deducting trading losses, which could otherwise be there for you. Now, additionally, making the 475F election also lets you avoid certain tax adjustments such as wash sales and straddles, which makes the process of tax planning easier because book and taxable income will be in line with each other when it's time to file. Let's talk a little bit about some of the cons. One of the biggest cons of making this election is that you end up making a lot of money with your day trading activity. You'll actually be taxed at a higher rate. No! This is because the top federal tax rate is currently 20% for capital gains, and the top ordinary income tax rate is currently 37%. That's a 17% difference. So this means that if you make a 475F election and you do extremely well with your trading activity, that you could actually be forced to pay an additional 17% in taxes. So basically, the 475F election is an excellent way to make sure that you can maximize deductions for trading losses. But if you make a lot of money with your trading activity, then it actually can cause you to have to pay more to the IRS at tax time if you do not have a tax strategy in place to to reduce your taxable income. Also, another con of the 475F election, aka the mark-to-market election for day traders, is that people who make it cannot defer gains. This is because the mark-to-market method of accounting requires you to calculate losses or gains on all of your trades at the end of the year, whether or not you have sold them. But if you do not make this election, then you can defer your gains and potentially save a lot of money in taxes in the process. So you should also keep this in mind when trying to decide if it makes sense for you to choose the 475F election, aka the mark-to-market. Let's round this thing off. Should I make the mark-to-market election, Karlton? I get asked this question all the time. Some traders have difficulty deciding whether or not they should make this election. This is because they know that if they make a lot of money, then they will pay less in taxes by not making it and by allowing their trades to be taxed at capital gains rates. But here's the thing, guys. Making substantial profits from day trading is a lot harder than many people think. So unless you are a seasoned day trader with a long history of making big profits with day trading, then most likely you should make the 475F election. If you do, it's true, you might get taxed a little bit more if you make big profits, but doing this will also give you a much better protection in the event you lose money with your day trading activity. This also transforms you into a true business owner, which means we can take additional deductions that most day traders can't take. This is especially applies to people who are brand new to day trading. People who are brand new to day trading really have no idea whether or not they will be able to do well or not. So therefore, the risk of sustaining losses is much greater for these new people. Therefore, the risk of sustaining losses is much greater for these people. After all, people who are experienced in anything, like day trading included, tend to get better results than people who do not have experience or who are just starting out. So if you're just starting out with day trading, or even if you have been doing it for 1 or 2 years and you have not had a lot of success with it, then I highly recommend looking into the mark-to-market election, the 475F. This way, if you do experience losses that are greater than $3,000, you will still be able to deduct them and you won't be limited by the capital gains loss limitations. Now, what are some other expenses that day traders can deduct on their tax returns? Now that you know that the deduction limitation of $3,000 for losses exists for day traders, you might also be wondering, like, what about other expenses that day traders could have? Well, the answer is that if you're doing day trading as a business, then there are a variety of business expenses that could potentially be written off. For example, if you bought a computer, monitors, trading software, or other equipment to help you in your trading activity, then these should all be deductible as business expenses. If you're working from home, then you might also be able to take the home office deduction, which covers a wide variety of expenses related to having a home office. However, in order to qualify for the home office deduction, you have to use your home exclusively and regularly for business. This means, for example, that you won't be able to claim the home office deduction for your living room, even if you conduct trades in there regularly, if you're still using the living room on a regular basis, like as a living room, okay? So we need a space in your home that's exclusively and regularly used for business. In order to get the home office deduction, your home office must only be used for business purposes, and it must be your primary place of business. Day traders also can deduct expenses for things such as day trading courses, day trading seminars, day trading books, and the list goes on. But the thing that you want to make sure before you take the deduction is that you always check with code section 162A that the expense that you're taking is ordinary in nature, necessary in nature, and reasonable in nature in the pursuit of income for what you're doing from a day trading perspective. Now, question, is the 475F election permanent? I get asked that one too. Some day traders hesitate to make the election because they fear that they will not be able to switch back once they make the election. However, this is not the case. In fact, the IRS has a procedure for reversing the election. In order to reverse the 475F election, you're going to have to file an automatic request for revocation under Revenue Procedure 22-14, Section 24.02. Now, I'm giving you this information just in case if you're a nerd like me and you want to geek out and Google search this, but this is how you can reverse this entire election. So if you want to undo your 475 election, there it is. Don't worry, if you have made the 475F election and are nervous that you will always have to do your taxes in this manner, you won't. If you want to get out of the mark-to-market election, you can. Now, if you don't want to go through the actual process of like handling the RevProc procedure 22-14, Section 2402 to get out your 475F election, then you can always hire a tax professional to assist you with doing this. We handle this procedure of making the mark-to-market election for taxpayers and then reversing the mark-to-market election for taxpayers. Many day traders hire tax professionals to help them with this just to prevent any potential errors, omissions, or other difficulties that could come up, like questions that could arise when trying to fill out your paperwork. So if that is you, I encourage you to reach out to my office. The last thing I want to talk about is there a limit on how much you can deduct as a day trader? The good thing about ordinary income compared to capital gains is that there is no limit to how much you can deduct for ordinary losses. In other words, ordinary losses are fully deductible from taxable income. So let's say you had ordinary income losses of $100,000 with your day trading business for a given year. In this case, if you made the 475F election, then you would be able to deduct the full $100,000 on your tax return, since your losses would qualify as ordinary losses.
Yes!
However, if you didn't make the 475F election, then you would only be able to deduct $3,000. That's the limit. This means that if you lose $100,000 day trading, but make the election in time, then you will literally be able to deduct an extra $97,000 in losses on your tax returns. This can be substantial for somebody who needs a big write-off that year and get some money coming back to them in the form of a refund check. Now, here's the golden nugget, now that we're towards the end of this video, that I've been waiting to share with you. Don't assume that you will automatically be good at day trading. Unfortunately, many people assume that they will be good at day trading because they're disciplined and they have some investing knowledge, and they took a brief course on day trading, or perhaps they have a degree that is related to finance in some way. The reality is that day trading is not easy, and most people who try it really struggle with it, at least at first. I mean, a large percentage of these people do not make the mark-to-market election in their first year of day trading and are thus taken by great surprise when they find out that they can't deduct all their losses in their first year. So don't let this happen to you. This happens to so many taxpayers that I work with, and they get discouraged and they stop wanting to become business owners. And maybe it only took the second or third year for them to find success. To prevent this from happening, just make the 475 election by the deadline if you're somebody that knows that you might not be as successful as you want to be in your first year. This way, at least you will know that if you have day trading losses at the end of the year, then you'll be able to fully deduct them, and you won't be limited to the $3,000 cap. Now, that's it for today's video, guys. Hopefully you learned some valuable information about taxes for day trading. If you need any help with taxes for day trading businesses, or if you like assistance completing your 475F election, then please feel to get in touch with my team by clicking on the link below in the description. Also, if you would like to learn tax strategies used by the wealthy to literally pay 0%, that is something that actually happens inside of my tax alchemy program. I'm teaching everyday taxpayers how to pay 0% in taxes legally. As always, don't forget to like, comment, subscribe if you enjoyed this video. Let me know what your thoughts are in the comments. I do read them. And if you're somebody that's watching this right now, please go make the 475F election in time if you're thinking about doing day trading. It could protect you. My name is Karlton Dennis. I look forward to seeing you on the next video. I hope you enjoyed this. I hope it was simple for you to grasp. Till the next time, cheers.